I'm here with Dan McMahon. He's head of equity trading at Raymond James. I mean, Dan, it is kind of business as usual, despite the significant news we got last night in the market rally we saw earlier today.
The bin Laden rally was, very brief as expected. He's a player in the war on terrorism, but certainly not the end-all, be-all at this point. He's been off the radar for just too long.
I mean, it's still a market concern that there's other players. Al-Qaeda's still out there, isn't there?
Clearly, but you can't base your investment thesis on terrorism concerns unless they're significant and planned or realistic. So we'll have to take that one event at a time and hopefully have none to deal with.
What should you base your investment thesis on at this point? Is it that we go back to, as I said kind of early, the fundamentals, whether it's the economy, whether it's corporate earnings?
It's all about earnings right now. We've just gotten through most of earnings season, 3 quarters. 2/3 of the S&P 500 has reported. 3/4 of them have outperformed on an estimates basis, on an earnings basis, and another 2/3 have outperformed on a revenues basis. So now it's, what's the next catalyst? People are looking ahead to June and the end of QE2, and so I think we're going to get back to just a little bit of, if you're not doing anything, you're not doing anything stupid for a while.
You said to me earlier about the whole adage about sell in May, go away. I mean, it hasn't always been true over the last couple of years, but are you getting that feeling? We've had a decent bounce back. I'm not afraid to open up my 401k statements anymore, but I mean, are you feeling that sentiment in the marketplace?
No, not at all. We think, that could be delayed until June and when people see what's going on with QE2, because right now there is a very strong underlying bid to the market. You've got participants who are not eagerly selling. Any bid has, any pullback has been met with some buying interest. So it very much seems like the trend will continue to be just that.
What's that bid based on? Is it all about QE2 and liquidity? I mean, we've had a lot of folks come on Street Smart with Matt and myself, and they say it's all because of that. That's what's really supporting all these asset classes. Is it that, or is it something else?
We've had a liquidity rally for sure, but I don't think that's necessarily what's driving the market at this point. It's based solely on a lot of players on the sidelines with cash and needing to play catch up with the market. It's been a corporate profit rally, if you will, because we've seen some inventories build up. We've seen that, so we're starting to see investments come back and the economy improve.
Hey, it certainly.
I think I heard Matt wanting to come in. Go ahead.
Thank you, Carol. No, it certainly seems, we talk about a lot of things being on hold right now, and there wasn't.
Wait, Matt, hang on a second. Do it again. Go ahead.
Say it again, Matt.
It seems like a lot of things are on hold right now. I was just saying until June. You mentioned that, and it seemed like this morning, outside of Osama bin Laden, there wasn't a heck of a lot of other news, but there are still obviously a lot of issues even outside of QE2. And we talked to PIMCO's Mohammed Al-Arian this morning, and I want to just bring in a soundbite from that interview.
This is a moment to quote President Obama for unity and common purpose, because we're going to need that to deal with the unemployment, the budget, and a lot of other issues where right now there is no political middle. The discussion is so polarized that it's very difficult to see how we're going to get to where we need to get to as a country.
So there are a lot of overriding issues there, Dan, and I wonder if you think people will come together on these things. It looks like the Group of Six is getting ready to come out with some real advancements as far as the budget is concerned. Do you think we're going to get through this, or is it going to be trouble until 2012 and then more?
No, I think we continue to get through this. There's been there's no shortage of other concerns. Bin Laden was not even on the radar screen. We've got housing concerns. We've got Middle East and African concerns. We've got the economic recovery and sovereign debt. So there's still, it still remains to be climbing a wall of worry here. But again, it's the economic improvement continues to shine through.
And that's what's most important. I think about, how long Matt and I have been talking about, Greece and Europe and sovereign debt concerns and worry about the economy. Yet we still seem to kind of chug along. Not every economic report is stellar, but we are seeing the trend line seems to be getting better.
The trend line's getting better. The volume remains incredibly anemic.
Is that significant, that volume?
Absolutely. This is, harking back to 2007 when we had a significant rally on zero volume and things got overbought pretty quickly. And some might argue that this market is starting to mirror that, the 07 market. So there are still housing concerns is predominant. It's tough to have a market continue higher without leadership from the financials, and they have been underperforming woefully. So there are still a lot of concerns out there.
Well, when you look at, go ahead, Matt.
Hey, I just wanted to mention, we talked to Larry Fink last week, and he pointed out there's still a ton of cash out there. We don't see, obviously, volume swelling because mom and pop and all of the retirement funds aren't really pouring their money into equities right now. Is that still to come, or is it never going to come back?
No, well, the markets are cyclical, so let's all hope it comes back and hope it comes back pretty soon. But now we're heading into summer as well. But I think the people have been staying on the sidelines largely because they were concerned about valuations. And now we've gotten through earnings season and the valuations have been justified. But now is it a matter of you just pile on and chase the rally, or you wait for the pullbacks? And you've got an awful lot of people waiting for the pullbacks, which would technically imply that there's still a lot more room to run to the upside.
Well, you talk about pullbacks. Are you expecting something significant?
We're not bearish. We are cautious. And, anytime you've had a market that's doubled from in the past couple of years, you expect them. When they have come back, they've been very healthy in backing and filling type mode. So we're expecting some pullbacks. It's part of a market that's going higher. Nothing goes higher on a straight line. And yes, we would use those opportunities to add selectively to stocks.
What specifically? I think you like financials, don't you?
We do like the financials. We think that they have underperformed, and once we see some normalized growth in terms of how their performance is judged in terms of revenues and growth, and there's still a lot of upside in terms of dividend growth, then we think they could explode to the upside. So that's not something you want to miss. We like the energy play, particularly those with exposure to oil versus gas, and particularly those with North American exposure. So there are certainly some opportunities out there.
I was looking at what kind of led the market when we did see some gains, and I think it was just consumer discretionary was among the groups. I mean, what about the consumer sector? Would you stay away at this point? At
this point, the consumer sector could be a little troublesome, particularly when you're here in the tri-state area approaching $5 gasoline at the pumps. You're going to start seeing industries pass along higher costs. Commodities are higher. Food particularly is inflationary. So the consumer is a bit of a concern right now, and that what happens when these costs start getting passed back. It's an immediate tax. I
mean, Dan, what do you feel like? I mean, I'm down here on the floor. It was interesting to come off of the Osama bin Laden news, and it really did feel like business as usual. I mean, what are you guys kind of waiting for, or is it just a continuation of the trends that we've seen so far?
A trend is a trend until it isn't. So
don't fight it.
That's exactly right. Don't fight the Fed, and there are concerns about the debt ceiling and here in the United States. So that remains a concern. But again, it remains a liquidity-driven rally.
What's the focus for the markets? Here we are on Monday, and obviously the big story was Osama bin Laden, and we're just kind of getting through the day here, and kind of, we ended with a slight loss. Is it the jobs report that we now focus on, and if so, what are you hearing?
Yeah, the jobs report coming out at the end of the week is always a focus. If unemployment...
More so, especially when we talk about the importance of the economic backdrop?
Absolutely, because now you've got fewer concerns as it relates to earnings, which everybody was on the sidelines waiting for. So now you have to refocus somewhere else. And unfortunately, I think it's people hoping or potentially hoping that it causes a bit of a pullback so that they can jump into the market as opposed to chase it and pick away style.
Just got 30 seconds. I'm thinking about the resiliency that we've seen in the market. How many things, major news events that have gone on overseas. I mean, are you just kind of getting used to it all in terms of these big major news events?
I don't think you ever get used to major news events. What you've seen coming out of the Middle East, what you've seen coming out of Japan. People have seemed to have forgotten about that. It simply points to the amount of cash that is on the sidelines and the willingness of investors to buy on the pullbacks.
Dan, thank you so much. We really appreciate it. Dan McMahon of Raymond James.